All right, pretty uneventful day for AMC today. Nothing has changed. One thing has changed actually is that the bear thesis that I was talking about in my previous two videos, I threw it out the window. It's garbage, doesn't make any sense. So we're not coming back down to 3.6 or 3.7. That is definitely not happening. And let's jump into SPY, which is crazy bullish. SPY looks fucking amazing, and that is very, very good for us. As I've mentioned in my previous videos, because the last two times that AMC squeezed, SPY was rallying to the upside. Now, SPY saw a new local high today around 423. I think 422.99 was the high of the day pre-market, and then saw some red from there, and then closed in the 420 range once again. This is just the macro perspective on SPY. Descending broadening wedge, the whole deal that I've been going over in all my videos. Golden cross on the daily, insanely bullish on SPY. And day number 43 in a row, closing over the 200 EMA, which is extremely bullish. SPY looks incredibly good. There's nothing bearish about this chart whatsoever. It looks amazing. Jumping into a different view on SPY. Now, this is the 4-hour with extended hours on. One thing I wanted to point out really quick is that from this descending broadening wedge, oh my God, from the descending broadening wedge that SPY has been trading in since January 2022, just bouncing off the support and resistance, and actually transitioned into an ascending triangle through the descending broadening wedge. An ascending triangle is a bullish reversal pattern to the upside. So once we hit the low, and I go over this in pretty much all my videos as well, very important, we want SPY to be ripping to the upside. So from this low here, around 350, SPY has done nothing but form higher highs and higher lows. And we hit that low in October 2022. So months ago, we hit this low, and since then, we've done nothing but form higher highs and higher lows to the upside, trading in this ascending triangle, which you have multiple rejection points off. You could see here, one break above here, I mentioned to reject off the macro. Just over and over again rejecting. This was the rejection off the descending broadening wedge. The retracement, you find a catch on support, which breaks you out. Again, you hit the top of the ascending triangle here, reject, retest on the descending broadening wedge, retest again, break slightly into it, and then reclaim the ascending triangle, and then reject again off the top of the ascending triangle, and just over and over rejecting the top, holding support on the bottom. So a breakthrough last week, a retracement one more time to the bottom support of the ascending triangle, and then a breakthrough end of last week, and then today we saw some more upside. 423 roughly was the high of the day, and from 423 we came down and tested perfectly right on the top of the ascending triangle. It looks very, very good. I mentioned in my last video as well some areas of resistance to be looking out for on SPY. Roughly 430, 438, and 450 are the next major key resistance points we're going to be looking at, and that's pretty much that. SPY looks very good. Wouldn't be surprised to see SPY trade in this range for a few days, maybe a day or two, testing the breakout here, coming down to 418, and really testing on this 418 level. Once it confirms that test, it's going to start flying to the upside. So that is pretty much it for SPY. One other thing I wanted to point out as well is that the market is synced. So SPY is synced up with all of the memes. The meme basket is about to fucking explode. All of them. GameStop looks amazing right now. GameStop is ready to go. If you recall the previous two squeezes we saw in AMC, it was at the exact same time that GameStop was squeezing as well. So that's that. The market is cyclical, and sectors run together, and that is not an exception for the meme basket. So seeing GameStop rallying to the upside right now, along with other stocks, Bed Bath Beyond, Microvision, the whole meme basket is looking very solid right now, and that is very, very good for AMC. And just to point out the market sync up that we're seeing right now, here's the ascending triangle that SPY is trading in, which it recently broken out of, and then we have the macro breakout on AMC, and then we're in the middle of the retest now. This retest is taking a very, very long time, which is fine. Really no need to be worried there. It's a retest, and the fact that it's taking so long, I think, is a good thing. Preparing for a huge move to the upside. So that's that. Pretty much breaking out at the same time. SPY and AMC here, and other validation is GameStop, the other meme stocks, all of it. The market is extremely bullish right now. Mainstream media, Wall Street, our government will like to say otherwise, but that is complete nonsense. The market is extremely bullish. That's not an exception to the meme basket, and is definitely not an exception to AMC. So that's that. Jumping into AMC, the macro, nothing has changed here. Same picture. The 3 fractal sequence here, the green, red, and blue, tracking it perfectly. Nothing has changed. I mentioned day-to-day price action does not make a difference on a macro perspective. We're still tracking perfectly, always have been. Not going to really get too much into the macro. There's no need. Touching on this again, because this is very important. The volume profile, and this is the macro. This is my macro here, the green, red, and blue, as compared to this. I just don't have the bars overlaid, but really just looking at the volume here, and I mentioned this in my last video as well. The volume is relatively low all the way through this until you get into the blue rectangle here, where it starts picking up, and then the January squeeze, you saw the highest volume AMC has ever seen. The volume comes back down and then builds its way back up for the June squeeze, and then comes back down and is relatively low all the way through this range. Once again, until we hit our absolute low here, volume starts picking up. Getting back into this range here, this range of volume that we're seeing is comparable to the range of volume that we saw on both squeezes in January and June. So that looks very good for us. That's very good. And that's pretty much it there. I was going to touch on the breakout retest here, but I'll do that on the I have some other photos that show it better visually, so we'll jump into those now. And this is one of them right here. Again, the top is just showing my macro perspective, which we are tracking absolutely perfectly and always have been. And then on the bottom, this is just zoomed in on this blue rectangle here, the January 2021 squeeze, what led up to it. This is that. And then over here, this is zoomed in on the blue rectangle here. Pretty much just showing and I mentioned this last time as well, running this descending resistance the same exact way from the start of the blue box, straight over your tri-peak, all the way down. That's where you find your breakout, your retest, and then your confirmer of the retest, which you bounce off, gap up, and squeeze from there. Before that, though, you have your first bottom, really flatten out here towards the end. Your first bottom, your tri-peak, which rejects off the resistance, your second bottom with a slightly lower low, an uptrend that breaks you out of the macro, your retest, and then your squeeze. Same thing over here. Your first bottom, your tri-peak that rejects off the resistance, your second bottom with a lower low, and then your uptrend that breaks you out of the macro, and then we're in the middle of our retest now. So looks very good. This is showing exactly what I just showed, except full screen now. I really don't need to go over this. I just did the two bottoms. This pattern here is extremely important. I've been preaching this since I made my channel, where the stock is running on a loop. It's doing exactly what it did prior to the squeeze in January 2021. SPY is doing exactly what it did prior to the squeeze in 2021, and the market is extremely bullish. Really not much else to say here. Just based off how I have this drawn, and you know what, I'll jump into the not really much to say there, so I'll jump into this. I went over this last time as well, and I actually reran the trend angles, and it's slightly different this time. It's actually the exact same angle from the top of the blue box. That's what I'm showing you. These are the two blue boxes prior to the squeeze in January here, 2021, and then our current cycle here, running a trend angle from the top of the blue box straight down over your tri-peak, and then all the way down where you find your breakout. Same exact thing on this side. The start of the blue box straight down over the tri-peak, and then where you find your breakout and your retest. exactly how we saw it in January 2021. The trend angle is exactly the same, minus 42 degrees on both sides. The bottom trend angle is very, very close as well. And the bottom trend angle I have measured from the lower low to the first low. And same thing over here, lower low to your first low, 176 degrees in the 2021 cycle, 178 degrees in our current cycle, 2 degrees off, pretty much the same thing. So the trend angles in this iteration of what we're tracking is identical. It's the same exact thing, and the movement is the same exact thing. Your first bottom, your tri-peak, which rejects resistance, your second bottom with the slightly lower low, your uptrend that breaks you out, your retest, confirm the retest, squeeze. Same thing, lower first bottom, first low, tri-peak, rejects off the resistance, lower low, uptrend that breaks you out, and now we're in the middle of the retest. So it looks very good. I went over this last time as well, the daily EMAs, which is just showing more confirmation that this was in fact our breakout. Same exact picture here. This is now on the daily. So same picture, first bottom, tri-peak, second bottom, and then the uptrend that breaks you out. Same exact thing over here. During this breakout in 2021, you reject the 100 EMA, and then when you break above it, you gap up from there and squeeze. Same thing here. Break out, you break over the 100 EMA this time, come back down and test. This test here is fucking nasty. This is a nasty test here, and it's holding up. It looks very good. So this in this cycle, we slightly broke above the 100 EMA. I mentioned in my previous video that the daily EMAs are extremely tight. The 20 and 50 are pretty much on top of each other. The 100 EMA is another 30 or 40 cents above them, and then the 200 EMA is at like 650, which is extremely low. So same picture here, 200 running right over your tri-peak as you see it over here. 100 running right through the tri-peak and right through your breakout point. Same exact thing here, right through the tri-peak, right through your breakout point. And then the 20 hovering under the 50, crossing in the tri-peak, comes back underneath, crosses again. Same exact thing here. Crosses in the tri-peak, comes back underneath, and then crosses again at your squeeze. We're pretty much just waiting for this retest to finish up. So jumping into that on a smaller time frame now, and I showed this in my previous video as well. Nothing really has changed from my previous video. We were completely flat today. Pretty sure we we closed where we closed on Friday, maybe a penny less. Completely flat today, so nothing has changed. So this is just showing the breakout, and from your first bottom, you form an uptrend, which breaks you out of the macro. You come down and test, breaking above and below the resistance line here. You confirm it, and then that's when you bounce off, and that's when you squeeze. So exact same thing over here. Even got the same kind of pattern right before you break out this U pattern here. Same exact thing here, right at the resistance, and then you get the rest of the upside as you see it here. Come down and start testing. And I mentioned in my last video as well, the first bottom that you see from the breakout, you form an uptrend. Same exact thing here. This one took a lot longer, bounced off the resistance multiple times here, break below, reject it over and over until you find this uptrend, which takes you back above the resistance, same as here, takes you right back above it, and then you break down from this uptrend, as we did, and then you break back below the resistance multiple times actually, which we did. From this breakdown, we have a wick below there, come back above, perfect bounces here, and then today we broke back below the resistance, but then reclaimed and closed above. It looks very, very good. Just now, I can't say for certain that there is not a few more cents of downside, but judging from the touch points and what I'm seeing here, from the breakdown of this uptrend, you have a few wicks below. It looks like we're pretty much done. You know, I wouldn't be surprised to come a few cents lower, but at this point, it looks ready to start climbing slowly back up to the upside. Now, having said that, I mentioned two scenarios in my last video. The first being the bear thesis, which is this macro, which is complete fucking garbage. We're not coming back down to 360, which in that case, you would peak on the June OPEX date. And then I gave a bull thesis where we would peak on the May OPEX date, which would be tomorrow. Obviously, it doesn't look like we're going to be peaking tomorrow, so the safe assumption would be that it's going to be in June. And this is just if the OPEX dates, and they can't be ignored. As of right now, it's 100% hit rate on the OPEX dates. I went over this in my previous video as well. It's 100% hit rate as of right now, so it cannot be ignored. From your OPEX, 7 trading days later is when you peak. Both peaks that we saw. The January peak on the 27th and the June peak on the 2nd. Both 7 trading days from OPEX. Having said that, the OPEX dates, in my opinion, cannot be ignored. It doesn't look like we're peaking tomorrow. We still have more to play out. So it looks like June's going to be that time for us. That's if, I'm saying this is if OPEX is like 100%. Obviously we could peak randomly, I'm not saying next week, but like we could peak and not be hitting an OPEX date. But as of right now, the safe assumption would be to not ignore the OPEX dates, as it's 100% hit rate. So that's that. I wanted to mention something else as well. From this breakout here, this retest that we've been in has been roughly 3 weeks. Now, obviously, this is taking a lot longer than how it played out in 2021. This breakout here and the retest was 4 days. 4 days here, breakout and retest. You confirm the retest, and then you squeeze another 3 days from there, and you peak. Now, from this breakout, this is 3 weeks now in this retest. I'm not saying for certain. What I'm about to say is not for certain, but I would not be surprised to see this. And what that is a slow climb back up to 620, probably around 650. This retest that confirmed, you break slightly above the high from the breakout, and then you gap from there. The high from the breakout was 620. I would not be surprised at all if for the next 2 or 3 weeks we start slowly climbing, maybe playing this out symmetrically, come back up to this 520 range, flatten out, and then form the other side of the cup here. Coming up to the 650 range, and then you would gap from there. So basically what I'm saying is I would not be surprised if we start slowly climbing back up to a double top, and that could take some time. Or it could just be a rifle as it was here. Just watching this play out, I'm leaning more towards it's going to take a while to get back up there. I could be wrong. We could just fly right up to a double top, and this could really speed up. But, the safe assumption would be that this is going to take some time, probably 2 or 3 weeks, as the 2 or 3 weeks to the downside. At the same time, it is a macro breakout, and spending a lot of time confirming this retest. Confirming the retest would assume that we're ready for a move up to the next range, so we could just fly off of this resistance. Previous resistance as support, and then fly just straight line up like we saw back here. That is possible, but I'm leaning more towards we're going to start slowly climb back up. This move might play out symmetrically, come up to 520, flatten out, and then form the rest of the cup like that. And then from there, you would get your gap up over the tri-peak, over the 200 EMA, and then that would lead to your squeeze. So that's pretty much that. Nothing has changed from Friday. I guess dates for a peak have changed, but June, it was May, June either way, so it's looking more like June. Or it doesn't have to land on an OPEX date at all, and it's just a random peak. I mean, that's definitely possible, but OPEX being 100% hit rate, it's safe to assume that there is some kind of correlation there with the 7 trading days post OPEX and AMC peaking. So I think that is everything I talked about, wanted to talk about. Would not be surprised to come a few cents lower. If this wants to load up. I would not be surprised to come a few cents lower. I also would not be surprised if the bottom is now in and we start slowly climbing our way back up. And I also would not be surprised if we got a just straight, just an absolutely wild green day back up to the 620 to 650 range. So that's what we're looking for. What else? What else did I want to say? I'm trying to look for something that I could show this good with. This one should work. Now, fractally speaking, there's not much left to play out here. Once this retest confirms, We're going to get the rest of this price action, which would take you to roughly 650, and then from there you would get this gap, and then from there you would peak, you would squeeze. So fractally speaking, we don't have much more to play out. I don't really see this retest getting dragged out for much longer. I mean, this is 3 weeks now. We're on week 4, and we're just closing above every single day. It looks good. I think we're pretty close to the bottom being in here. If not today, the bottom was in, and we should start seeing some upside back up to the $6 range. This is what we have left, is whenever we hit our bottom, just assuming that the bottom is in or close to in, and that this retest holds, which I'm pretty confident it will. This is what's left, is a straight line. I'm not saying it has to be a straight line. Could be a slow climb back up to a double top, slightly higher, 650-ish, something like that. We get the 650, then we gap up to the top of the tri-peak around $8-9, and then from there, just all hell breaks loose, and we squeeze. And that is pretty much it. Overall, everything looks good. The market is extremely bullish. The market is synced up. Meme basket is ready to fly. AMC is ready to fly. SPY is ready to fly. Everything looks good. Everything is bullish. And I have absolutely zero complaints. So with that being said, that's the video. And I will catch you guys tomorrow.